All right, so we'll go ahead and get rolling. So first, just want to thank each of you for being here with us, another webinar here at Sprinterra. Today, we're going to be talking about our cash basis reporting solution. So this is an ISV product that we have, and we'll talk in a little more depth. Before we get there, just wanted to share, my name is Garrett Rochelle, Director of Growth here at Sprinterra, and I'll be your presenter for today. Quick agenda, we're going to do an introduction of Sprinterra, kind of who we are, what we do, that sort of thing. We'll do an overview of the cash basis solution. We'll take a look at the core features. Then we'll get into some of the new features that have come about and some bug fixes, that sort of thing from our last cash basis webinar, which I believe was the beginning of this year. And then, sorry about that. And then we'll get into a live demonstration of the actual product, kind of give you an idea of what you would see from the perspective of your client, perspective of yourself, if you're going to be using it. And then we'll get into a Q&A session as well at the very end. If you do have any questions that pop up along the way, definitely feel free to post them in the chat. We do have some folks from our team on here. We may be able to answer them as we go, but if not, we can always jump back to them at the end of the session and go through some of those questions in detail. So about Sprinterra, we were founded in 2007. 2013 is when we began working with Acumatica. Since then, we've delivered over 500 projects. We have a team of 40 plus on the Acumatica side of things, and we have hundreds of Acumatica certifications as well. Our practice is split into two areas. So we have services, which we provide services to VARs, to ISVs, to OEMs, to Acumatica themselves. And these services include, but are not limited to, development services. We do full service upgrades. So we manage upgrades from the initial sandbox creation all the way through to go live support of that upgrade. We work with the modern UI transition, which is obviously a huge topic and a very timely topic right now. So that's something that we offer as well. And then we also offer data migration and a variety of other services as well on the services side. On the ISV side of things, we have two main products. One of them is the cash basis solution, which we're going to talk about today. And then we also have the property management solution, which has become a pretty big piece to our puzzle as well. So with that, we'll go ahead and jump into our cash basis solution. And we're going to start by just doing kind of a high level of, what it is. And really, at its core, I want to start with a kind of a definition of cash versus accrual. I know for some of us on here, we may be more or less accounting minded, but just so we're starting at the same baseline for everyone. So accrual accounting is going to be where transactions are counted when the order is placed, the item is delivered, or services are rendered. So what that boils down to is revenue and expenses are recorded when they're earned or when they're incurred. So this is from the accrual accounting perspective. And by default, out of the box, Acumatica is an accrual accounting system, and it's going to remain an accrual accounting system. From the cash side of things, cash accounting is where transactions are counted once the cash is actually received or paid. So revenue and expenses are recorded once the payment is collected or once the payment is dispersed. So in essence, from cash accounting, you're recognizing revenue and expenses once the money changes hands. So once you make that payment or once you receive that payment. That's the two differences between the two, and we'll get into some of the nuts and bolts of that here in these coming slides. So who might be a fit for the cash basis solution? So a couple of different areas could be small businesses who are not registered as a corporation and with annual income below $25 million. It could be non-publicly traded companies who are not required to disclose financials quarterly. Could be service-based businesses with no or with minimal inventory. In many cases, you'll see sole proprietors or small businesses. And then you may also see some cash-only businesses, such as freelancers or retailers who are using cash basis reporting as well. From the Acumatica perspective, as far as the types of clients that you might see who can use cash basis accounting, and many times we'll see this in professional services. We'll see architects, we'll see property management. So this actually ties in very closely to our property management solution, as many property managers also can use cash basis accounting, and many construction companies as well. So that's just to name a few. It's not an exhaustive list, but just to give you kind of an idea of the pool that we're looking at. And now I want to talk about some of the use cases. So currently, the main modules that this applies to are going to be GL, AP, and AR. Making a quick caveat that, as we said before, inventory typically does not go well with cash reporting. So as a result, typically we're not going to be working much with distribution companies. But some of the use cases that you may see could be a customer who's using accrual accounting to be GAAP compliant, but they may also have certain requirements on the tax side to report expenses or different things like that on a cash basis. You could see customers who have multiple entities, and maybe the main company uses accrual accounting, and then a subsidiary is using cash accounting. You could see property management companies who want to see their current cash position. You could see cash basis customers who are migrating to Acumatica, and they want to maintain cash books for year-over-year comparisons. And then you could also have situations where clients have banks or governing bodies that they're working with that require certain cash basis reports in order to work with them to secure funding or just to meet their requirements. So with that said, we're going to talk a little bit about some of the core features of the cash basis solution. So as I mentioned before, Acumatica at its core is an accrual accounting system. So all transactions are recorded in the accrual ledger by default. So whether you're creating an AR invoice, whether you're creating an AP bill, whether you're posting an entry on the GL side, you're typically posting to the accrual ledger, which is your actual ledger. What the cash basis solution does is we're creating a second ledger. So we're not doing away with Acumatica's standard accrual ledger. We're not overriding it. We're not changing anything with the accrual ledger. What we're doing is we're creating and populating a second cash ledger. So our solution automatically populates the cash ledger with all of these transactions as they should appear from the cash perspective. So what ends up happening is you'll have the ability to run standard Acumatica reports. You'll have the ability to pull data to Velixo. You'll be able to do all of these different things from the reporting perspective without some additional heavy lift to be able to leverage the cash basis functionality. Essentially, we are populating the cash basis ledger with accurate and up-to-date cash basis books so that you can then reference that ledger when needed, and then you can reference the accrual ledger when needed as well. So you're probably familiar, but like a standard financial report in Acumatica is going to give you the ability to say this report should reference ledger A, ledger B, ledger C, etc. So when you're running financials in Acumatica, you'll have the ability to choose, we want to run this from the accrual perspective, or if you wanted to run it from the cash basis perspective, you would simply select the cash basis ledger, run the report from that perspective, and you'd be good to go. This also works if you're creating new custom reports, if you have certain reporting requirements you're trying to meet. It's just going to be a matter of pointing that report to the cash basis ledger that we're populating, as opposed to maybe the standard accrual ledger. So maybe the key takeaway from this particular slide is going to be that the cash basis solution is not removing your accrual ledger that is standard with Acumatica. It's just creating a second ledger, which is going to be populated kind of side by side with the accrual. And then you have access to both, and you'll have the ability to run reporting from either of those perspectives that you choose, depending upon the situation and the scenario. So now let's talk about maybe from each side of this thing. So let's first talk from the revenue side. So as I mentioned, this is built on top of Acumatica accrual accounting. It's not replacing. So you're going to run this side by side, and it's copying the accrual ledger entries to our cash ledger. So the workflow that happens here is, let's say you have a standard AR invoice in Acumatica and you release it. What's happening from an accrual perspective is we're debiting accounts receivable and we're crediting some revenue account, right? At this point in time, from the cash perspective, no cash has changed hands. So nothing has happened yet on the cash side of things. Now, let's say now the payment comes in, right? Whether that's same day, whether that's a week later, whatever the case may be, the payment comes in and we're now posting that in Acumatica. So from the accrual perspective, we're debiting cash, our cash increases, and we're crediting accounts receivable to clear out that original accounts receivable hit. So from the accrual perspective, at this point, what remains is we have a $100 revenue impact from the date of the invoice, and then we have a $100 cash impact from the date of the payment. Whether they're the same date, different date, either way, that's how it's going to flow. Now, from the cash perspective, once this payment is released, the system recognizes, okay, we have cash changing hands. We're going to need to create the cash ledger equivalent of what just happened on the accrual ledger. So it runs through our cash conversion process. When it does this, the end result is going to be, as of the date of the payment, we're going to see a debit to cash, and we're going to see a credit to our sales revenue. So end result for accrual and cash is similar in the sense that we have an impact to cash and we have an impact to sales revenue. However, the timing components are where you're going to see the difference. For the income account in this case, or from the AP perspective, the expense account, when that's impacting the general ledger, that's going to change depending upon whether we're doing it from the accrual perspective or whether we're doing it from the cash perspective. And very similar to this is on the AP side. The process is essentially the same with the exception of we're now impacting expense accounts, right? So if we run through a standard accounts payable workflow, we have an AP bill and we release it. So from the accrual perspective, we are going to debit some expense account. In this case, we're saying COGS. And then then we're going to credit AP to account for that accounts payable impact. Payment comes in. At that point, we're clearing out the AP and we're crediting to cash to reduce our cash. The cash conversion process runs because it recognizes cash was impacted. And now the cash ledger entry was created with a debit to COGS and a credit to cash. So in this case, you've got a similar process happening on both AR and AP, where once the payment is made, once the money changes hands, that's where the cash ledger is now going to be populated. From the general ledger side of things, most of what's posting here is going to flow directly through the subledgers, either AR or AP. However, if you do have the need and you're going to be posting manual journal entries as well, you can post it to the cash ledger a couple of different ways. One is you can simply select the cash ledger when you're creating the entry. However, it may make more sense just to simply select the Create Cash Basis button. So if you're creating one-off manual GL entries, then you can simply, with the click of a button, create the cash basis equivalent of the entry that you've just made. If it's something that you're going to be doing in mass, then we could turn it into slightly more of an automated process, depending upon what's going to work best for you. Okay, and then two things on the configuration side of setting up cash basis. So one thing that goes into it is this cash conversion mapping. So this is where you're able to designate what accounts do you want to be impacted on the cash ledger from the accrual entries that the system is creating the cash ledger transactions from. So whenever you're creating these cash basis transactions, it's happening automatically behind the scenes based off of whatever mapping you have here. Now, I will say probably the most standard mapping that you're going to have is simply a one-to-one. So that when account A is impacted on accrual, that means expense account A is going to be impacted on the cash side of things. When income account B is impacted on accrual, on the cash basis side of things, you're also impacting B. However, there are some edge cases, and in some cases, you may want to do certain roll-ups to where if your cash basis needs to be reported on more of a summary level, you can map multiple accounts from the accrual side to one account on the cash basis side. If you have prepayments that are happening, ultimately, in that case, the payment comes in and an invoice hasn't been created yet, potentially, then we would need to know where does that prepayment go on the cash basis side, those types of things. So we won't go too much into the weeds on this, but the cash conversion mapping is where we make sure that when the cash ledger transactions are created, we make sure that they're posting the way that you would want them to. So this is something that we would go in a little more detail on during an implementation. And then one additional thing to point out, we can account for clearing accounts as well. So if you are posting to a clearing account before reconciliation, before you're actually going to clear that out and move it to a true cash account, then we can account for that in the mapping as well to make sure that's posting to the correct cash accounts. All right, and then that cash conversion process that I mentioned, this is going to run on a screen called cash conversion in Acumatica. And this screen is populated anytime that cash is impacted. So when those payments are coming in on the AP side, on the AR side, they're all flowing into the cash conversion screen. And then we'll simply use an automation schedule so that it's going to convert those to cash basis, either on a daily, weekly, monthly schedule, depending upon what works best for the timing of your client. So this screen is just simply an automated conversion based off of the payments that come in. And we're going to go through a demo in just a couple of minutes. So in that demo, we'll walk through some of these pieces that I'm talking about now in just a little more depth. All right, last thing to look at before we get into the demo is we're going to go through some of the new features that have come out in the last 6 months or so with the cash basis solution. So the first one is use per company and branch. So we've now made it very simple. If you have multiple companies and branches, some of which are using cash basis, some of which are not, we've set it up so that you can simply flag when you're going to be using it. It takes all the others out of the equation, and you don't have to worry about any mixing and matching, anything like that. It's simply going to convert the transactions for the appropriate companies for the appropriate branches. Additionally, we've added cash conversion mapping for sub-accounts. So I briefly showed before the conversion mapping for accounts. We also have the similar functionality for sub-accounts, so that if you are using sub-accounts for that extra layer of visibility in your accounting, the sub-accounts can convert over either one-to-one or via some logical pathway with our solution as well. We now have the ability to convert historical data for live clients. So if you're purchasing cash basis tomorrow, you could go back and pull over data from all of 2025 or 24 if you have that data living in Acumatica. So it's not purely from the day that you go live with it. You can go back and bring it forward. One caveat to mention with that is the cash basis solution works optimally with pay by line active. So if your historical transactions do not have pay by line active, they could still be converted. You would just lose a little bit of the granularity that you would typically expect to see with our cash basis solution. A couple other pieces, we've also added a new cash basis sales tax report. So this is something that came kind of via popular demand, but this is going to allow you to very easily report sales tax on a cash basis as opposed to the standard accrual, which the system tax screens are going to report on. We've got enhanced functionality for handling refunds and void payments, void refunds. There was a gap here previously. We've corrected that. And then finally, we've added functionality around tax posting. So this specifically relates to organizations who are either going to have multiple taxes on documents or are going to have partially deductible taxes on their documents. So in both of those scenarios, we've improved functionality, and the cash basis is now perfectly converting those types of transactions as well. With this said, we're going to go into the live demo. So I'm going to pull over my demo environment in just a second. And what we're going to do here is we're going to just walk through a standard AP transaction, a standard AR transaction. We'll go through the conversion so that you can see that live, and then try to give you a better idea from that perspective how it's going to flow. So first, we're going to go into payables, and we'll start from an AP bill. And I've already mocked up one AP bill up top, so we're going to go through this one. So you can see this was a purchasing and marketing expense as of December 1st, right? And so we're impacting two different accounts, our 60,000 and our 61,000 accounts. And again, the important part is the date of this was December 1st. Now, if we look at the financial tab of this, and I'm just going to pull this up very briefly, but if we go to the underlying general ledger batch that was created from this, we're going to see kind of what I talked about previously in the presentation, where we're crediting our accounts payable, and then we're debiting our two different expense accounts. Okay, so this is standard Acumatica accrual accounting. This is the default transaction that's created. Now, if I look at the applications tab here, I've got a payment created but not released yet. So what we're going to do is we're going to go into the payment, and then we're going to release it. And we're actually going to see if we can release it. We'll just release it as of the 10th of December, or perhaps let's see if we can do it out in the, it's not going to let us do in the future, of course. That wouldn't make sense. So we'll do it as of December 10th, which is just today. So I'm going to remove the hold on this transaction, and I'm going to go through the process of releasing this payment. And I apologize for any bit of latency here. I think we all kind of have a pretty good understanding of the speed of some of our demo environments. So we're just going to process this. And this will give us our actual check. And while that's loading, let me just jump back over to my check and payment screen. And what we should see here is a payment that's ready to release. So when we pull up this payment and release it, the first thing that I want to do is I want to look at the GL transaction that was created. And again, what we're going to see right now is going to be the accrual accounting. And then, so we've got our payment up here. You can see it's printed. I'm just going to click into this. I'm going to release it. And then once this releases, on this financial tab, we're going to see our batch number. And this is the accrual entry that was created. So at this point, it's all standard Acumatica functionality. It's accrual accounting. And what this payment did is it credited our checking account. So we've decreased our cash position. And then we also debit our accounts payable. So from the accrual side of things, we have a credit to cash. We have a debit to wash out payable, which goes with the previous transaction, which credited payables and then are debited our expense account. So what has happened in the background is if we go to our cash conversion screen, so I'm just going to pull up under finance, our cash conversion screen. This will now have flagged that payment that just happened. So this payment as of 12/10, it's now flagged it on cash conversion. So this is where typically you're going to have an automation schedule, which is automatically converting these to cash basis. Just to give you kind of the full idea of what's happening behind the scenes, we're going to do it manually for right now, but typically this will just flow behind the scenes. So what I'm going to do is I'm going to process this cash conversion. And then we'll go look under the finance module under our journal transactions. And this is where we're going to see the two accrual entries that the system made. And then we're going to see an entry to the cash basis ledger from that cash conversion that we just did. So you'll notice we have an entry to AP, which was the original credit to AP and the debit to expense. And then we have the second entry, which was the cash impact and the clearing out of AP. These are as of 12/1 for the bill, 12/10 for the payment. Then if we click into this cash basis entry, this is simply impacting cash, and it's impacting our purchase expense, purchasing and advertising expense accounts. So you can see this is referenced as a cash basis transaction. It's saying this was the original batch number that it converted over from. And this completely takes the concept of AP out of the equation, because from the cash basis side of things, AP doesn't exist. It's simply the cash was paid out, and now we're recognizing our expenses in conjunction with that. You can see that, again, this was done as of December 10th, as this was the date that the payment was made. Similarly, I'm going to jump over to the receivables side of thing, and I'll make this a little quicker. We won't go into all of the kind of the financials behind the scenes until the very end here, but we have this original invoice. And then on the application side of things, we have a payment which is queued up and ready to go. And then as this opens up, we're just going to release this. It's going to be released as of the 10th of December. We'll release this, and then once that processes, we'll jump back to our cash conversion. We'll refresh it. And now we have this new payment. This is now payment in, which is ready to be converted to cash as well. And then the same thing is going to happen if we go back to our journal transactions now. We're going to see a new entry to cash basis. And again, this is going to recognize the receipt of the cash, 30,000, and then the income account, in this case, sales revenue, as of the 10th of December. So when we run a profit and loss, for example, from an accrual perspective versus a cash basis perspective, like if we pull up a profit and loss here, you're going to have the option to choose, do we want to run this from the accrual perspective, or do we want to run this from the cash basis perspective? And then you'll see the corresponding numbers. So where this would be very relevant would be, let's say this bill came in October and we're finally paying it now in December, or maybe the receivables, we've been waiting 4 months to receive payment for that invoice. That's where you're really going to start to see the power of this solution. And again, it turns it into, rather than being a process where your accountant needs to spend hours and hours and hours each month to create the cash basis reporting, now it's something where it's happening simply and quietly behind the scenes. And then it's just a matter of saying, do we want to reference the actual ledger when we're reporting, or do we want to reference the cash basis ledger when we're reporting? Okay, so with that, I'm going to slide my demo out of the way, and we'll move this out of the way as well. And then we'll jump back to the presentation. So what I wanted to close with was just very quickly how to get started if you have potential clients or you have potential questions. So identify and research your existing and potential clients for those who may have a cash basis requirement. It's valuable to know that there's a solution for it. If you do have a lead, you can register that lead with us. You can reach out to myself or the Sprinterra team to schedule a discovery call, to schedule a demo. We'll complete the sell, and then you can oversee the support and implementation phase. So we do offer implementation for any of these cash basis deals. If it's something that you'd like to take on yourself, we can kind of provide you some resources to be able to implement on your side, or you can, kind of closely observe our implementation, and then future implementations, you can take it from there. We're fairly flexible in how that would work. All right, and then the last piece of this is pricing. So annual license for cash basis is going to be $2,700. And then the implementation is also going to be a fixed fee of $2,700. Included in the package is level 2 support and new versions. So there's no additional cost to receive new packages for new versions and for level 2 support. But we do also offer level 1 support for an annual subscription of $1,500. And then additional training on an ad hoc basis for $130 an hour. So I give you just a second to look at that, and then we'll move it into our last piece of this, which is going to be questions and answers for anyone that has them. We'll open them up for that.
Hi, Garrett. I was wondering, okay, so if we want to do this for 2025, can you walk me through, and we buy this tomorrow, like, can you walk me through what the process would be and how long it would take to be able to get cash basis financials?
So if you wanted to be able to have it for kind of year end 2025.
Mm-hmm.
Yeah, so it's similar to kind of an Acumatica implementation in the sense that we can pretty much move as quickly as the client is able to return a couple of pieces of information and to do some testing on some of the configuration. Realistically, we would typically expect to be able to have this up and running with a client and VAR that's taking part in the process really within 2 to 3 weeks is a very reasonable time frame. Really, the only time that we start to run into delays is if we're just getting trouble getting some of the training turned around. But again, it's nowhere near as heavy of a lift as a full Acumatica implementation. The configuration is going to be much much lower, and the actual testing and training is going to be much lower, simply because the end result of this is the client's process doesn't change. It's just a lot of behind the scenes that's happening to kind of enable that reporting to happen. So we can have most of that set up within the first week or two. And then it's just a matter of confirming with the client, yes, this is showing as expected. And then if they need any help getting additional reports built or anything like that, then we can kind of get into that phase. But standing it up to be usable, you're looking at a couple of weeks.
Thank you.
Mm-hmm.
I have a couple of questions.
Sure.
And this is probably showing my lack of accounting knowledge here, so forgive me. But
Yeah.
so you demonstrated how it shows the transaction available to create the cash basis related transaction when you issue a payment. But what if you have like open AP or AR at month end? How does that process work? Or or did I miss the related cash basis transaction for the original AP entry? I don't,
So for the original AP or AR entry, there's no
there's none.
cash
Okay.
basis entry. Yep, it only comes into play once that payment is made. So
Okay.
if there's a partial payment made, you'll have a partial cash basis entry made. So let's say we have a bill for $1,000 next month, or end of this month, $500 is paid. There would be a
Mhm.
$500 entry from the cash basis perspective to recognize half of that expense and half of the money coming in or going out. And then once the final payment was made, it would do that, it would complete that. But yeah, until a
Okay,
payment
I
is
got you.
made, there's not going to be a cash basis.
Yes. Okay. So there's just no entry. Okay. I got you
Mhm.
there.
Yeah.
Secondly, there on your screen when you were showing the journal transactions. So I saw two check boxes, actually three. I saw one that had like accrual, one that said cash basis, and one that said cash basis created. Do those, because I was expecting to see the accrual selected on the original entry, does that just not populate, or does it only show for the cash basis entry?
Let me see.
I'm just trying to think of ways, things that clients are going to come back asking me questions and I need to know how to troubleshoot stuff.
Yeah. So let me make sure I'm understanding. So I'm going to pull up the cash basis entry that we had. So in this case, this one is
Yeah,
saying
it's
this is a
still
cash
there.
basis.
And I
Then if
see
we
that.
look at the original entry, which I believe this one would have come through AP, it's going to reference back to the cash basis
So it's
dash. But
see,
yeah, I see what you're saying where it's not
yeah, it just
checking the
doesn't
accrual box.
check, but I do see there where it says cash basis created now. So that does I was just a little bit
Yeah.
confused about the accrual checkbox there, but
Yeah,
okay.
and I've got to say I'm not 100% sure why that's not filling in. I can take a look at that and I
Okay.
can get back to you and let you know. But yeah, you will always have this cash basis created,
Once it's
and
been
then on the
created.
flip side, so this transaction here, it'll reference that it is a
Yes.
cash basis entry. But I'll take a look at
Okay.
that accrual box and I'll let you know.
Okay, thank you.
Yeah.
And then my
Yeah.
last question is because it's doing these, I guess, basically duplicate journal entries, right? Which is creating another transaction in their Acumatica. Do you have an idea of like what this does to the clients, like CC or CTVs, like the transaction counts? Do they ever have to like bump up their tier or license or anything with Acumatica because of this?
So we haven't heard of that being too much of an
Okay.
issue.
Okay.
But yeah, I mean, the fact of the matter is it's going to be creating for every accrual
Hmm.
entry that's flowing through AP and AR, plus any manual journal entries that you'd also like to appear on the cash basis side, there's going to be
Hmm.
an additional entry being made. So it's certainly using this solution is going to increase specifically the ETVs. It's not necessarily going to increase their commercial transactions, but the ERP transactions it's going to increase because that's essentially happening on every save within Acumatica.
Hmm.
So
Yeah.
it'll be higher from that perspective. But we haven't gotten any feedback yet of it being something that's substantially driving them to require a tier increase.
Okay.
Realistically, most of the feedback that we hear about the ERP transactions is either emails are driving it out of the loop or some sort of integration with some sort of third party. We haven't heard feedback about the cash basis
Okay.
transactions just yet, but if we hear that, we'll definitely share.
Yeah, and my sales team, they're more in tune to what all of that is. And so I was just asking because I
Yeah,
have a feeling they might ask me. So, okay.
for
Thank you
sure.
for that.
Yeah, great questions. Thank you. All right. Any other questions that we have today?
Garrett, there is a question in message box.
Are you referencing the one from Jeff?
Yes.
I was just, the GL transaction is in the CVT. You answered it more completely, Garrett. So.
Got it. Yeah, and I know sometimes the CTV versus ERP transactions, I know that's become more of a thing as Acumatica started to police the ERP transactions a little more closely. But yeah, we wouldn't touch the commercial transactions. All right, thanks, Jeff. Anybody else? All right, well, if that's it, I really appreciate each of you coming by. If you have any questions that come up a little later down the line that you'd like to ask us, you can feel free to reach out at any time. But yeah, with that said, really appreciate the time and hope you all have a great rest of your day.
Thank you so much, Garrett. You too.
Thank you so
Thank
much.
you.
Thank you.
Bye.
Thank you.
Thank you. Have a great
you.
day.